For those of you who this is your first time coming to a BrightInvestor office hours, my name is Donato Callahan. I'm CEO and co-founder of this fine little software company we have built together. And office hours are designed to give some upfront one-on-one answers to market research, deal analysis, questions about how to use BrightInvestor better, and suggestions for improvements. This group has done a lot of great work suggesting improvements. You guys may have seen the latest update email we sent out for some upgrades we made, as well as some new ones coming out in the next, let's see, I think this Friday. And we'll be releasing another version about every 10 days for the rest of the year, with all the upgrades that this group has suggested for the platform. So lots of fun stuff coming. So as usual, I'm going to go ahead and open this up and suggest if anyone has any questions about BrightInvestor, or has questions about a deal, or has questions in general, please go ahead and unmute yourself. This is an open conversation, kind of open forum. We are friends, we are friendly, and there's no judgment for any questions that might seem too easy or too hard, or anywhere in the realm of real estate. So please, if you have something on your mind, go ahead and unmute yourself now, and happy to hear from you.
Hey, Donato, I'm on my phone right now, so if you give me like a minute or two, I'll pull up BrightInvestor on my laptop. I was looking at a fourplex,
Okay.
and the price was a little bit out of breath because I was just got done a little bit of exercise.
Very good.
Um, it was 300,000, but then when I looked at the property details, it
Mm-hmm.
was like a couple $100. So I'll get you the address, but yeah, I thought it was a little bit odd because when I first found it, it was it Redfin? It was either Redfin or Realtor, and it was showing 299 flat. And so when I went
Okay.
into BrightInvestor to start looking at everything a little bit more closely, that's when I was
Mm-hmm.
like, the list price was off.
I
So
wonder, we
yeah.
may have picked up the record for it being listed for rent, I wonder. But if we get into computer, if you want to send me the address, I'll take a crack at it right here.
Okay, yeah, give me one quick second.
No
One.
problem. This actually brings up one of the updates we're making. Over the last couple of weeks, we did some split testing between about half a dozen different data providers. You know, your popular prop streams, your prop wires, deal machines, batch leads, privies, list source, and we did some DAX testing for data in our system, looking at property information across all of them. We did a sample of about 5 or 6 properties picked at random across the U.S. It was really interesting. Is that I'm being honest here, right? Everyone was wrong in a different way, which was really interesting. Every single property record was different no matter where you got the data from. Some, like PropStream, called the single family house a duplex. Some were missing transaction history. Some had a different square footage. Some had a different bedroom count. So as we back tested all this data, we were finding that there were inconsistencies across each platform. And so we found that a lot of folks who are doing this or in real estate, a lot of folks who are bright investors are smart people. And you guys generally like to check and double check your work when it comes to, I found this property, I checked this out, I looked at a couple websites, here's what I'm seeing. And we realized that no platform allows you to edit the data. So you guys know that we had added the ability for you to tweak the bedroom count and the bath count and the square footage. Well, now we're coming out with the ability to tweak the price, tweak the property status, whether it's on or off market, and you can change the sales comps. So you can actually go in and edit every single sales comp and tweak its beds or bath or square footage and save it into your profile. So from now for the rest of the time, you have that data. So when you guys are going on platforms like Zillow, or you're talking to a realtor, or you're basically doing the double checking you guys are already doing, we wanted to create a way that rewarded you with the ability to save your findings and overwrite what BrightInvestor has, and only you have it. So you're the only person at that level of detail for that property for now for the rest of time. So that is one of the upgrades that's coming out. Next version, the version after that, for that specific reason, because that way we're able to combine the property that we're pulling with the things that you guys are seeing on the ground to make it the most valuable, I guess, experience possible.
Yeah,
Let's
that
see
definitely
what
makes
else.
sense.
Um, and I know Sarah's been testing our Burr calculator that's going live here. She has an early version of it, uh, playing with it and seeing how it goes. So that will be coming out here pretty quick. And let's see I'm pretty sure the draw boundary, so the ability to draw a boundary for your properties, I'm pretty sure that will be out in the next 72 hours. Coming down. So that is about to drop as well. So a lot
Right.
of fun stuff.
Okay,
And
so I
thank you, Chester, for
found,
bringing that up. Okay.
yeah,
You got the
I
deal?
found the, yep, it's 8542 Ironwood Street.
Ironwood. That's the name of one of my LLCs, actually. That's crazy.
Huh.
Yeah, I have a bunch of different LLCs with a bunch of like blank word and then wood. That's one of them. Okay, so 8542
Yep.
Ironwood Street in Detroit. Wait, yeah, okay. I see it says the list price of it. Yeah, that's weird.
And I think it was Zillow. Well, when I clicked on the Zillow listing, that's where it showed the 299.
Hmm. Yep. I see it right here. 3426. Okay. So this is the kind of thing that we're fixing with the ability to change the list price and the ability to change the off market. So I don't know why it's pulling that. I'll check our database and see why that's coming in like that because we have the square footage, we have that. Being able to change it to on market, and it's pulling as a single family. I should probably be able to edit that as well. Price and price and property type. I'll make it a note for myself to go find that one. Well, since we're here, we should talk about this deal and analyze it if you're cool with that.
Yeah, 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 definitely.
Okay, so first off, and I'll share my screen so everyone can see what we're looking at here. I'm not just talking to the void. Okay, so this is the deal. So this is the error that we found. Thank you, Chester.
Mhm.
And this is currently the property's absentee out-of-state owner, and it's currently owned by the Affordable Housing Investment Group. It was picked up for 110K, looks like 2022. Put a loan on it. Here's our Zillow photos for this bad boy. Me personally, I love two bedroom, one bath apartments in my fourplexes. I personally love that approach. Thing looks great. I see updated windows. I see a nice pitched roof. Hardwood that looks like that could be hard vinyl floors. Paint's a little outdated. That's really outdated flooring. That floor needs refinishing, but flooring, refinishing, and lighting is not too shabby right there. That is the tiniest little closet I've ever seen in my life. Um, it's like someone dumped some money into the bathroom.
Yeah,
Looks interesting. What is going on here? That's
that's
very
what I
interesting.
said. I was like, either that's a regular closet or
What the
a
hell?
let's get it on closet.
I didn't know they still built those. What is going on here? Okay, the
Yeah,
exterior looks great. The interior, you're gonna need some work here. But this
yeah.
from a group out of Florida, so the sales comps aren't gonna be super valuable here right now because of that. So let's go ahead and let's pull some rental analysis here. So a two bedroom, one bath apartment in this area should go for about 900 to 965 based on these rents. A
Hmm.
landlord
Yeah.
insurance policy, I mean, because it's a full brick building, this is why this is so different. That brick building is going to cause this to be much, much higher. So that does not surprise me because
So
that
one of the
replacement cost is going to be crazy.
yeah, and one of the interesting things, like at least with the insurer that I use, I have an all brick 4-1 not too far from here. And I think it was like right around like 95, $96. So what I've been doing is for duplexes that are all brick, I'm just doubling that. If it's a triplex, I'm tripling it. For so something like a quadplex, I was thinking closer to like, 350, 360 range. So something like, 317 or what was it, 320, something like that. That,
Yep.
basically using that as sort of a conservative estimate makes it,
Yes.
fairly comparable.
Perfect. Yeah. So what I'm looking at, I think this thing's probably going to need, geez, I mean, some of those units need some work. I might
Yeah, I was
do
gonna
as
say
much as
like
like
20
twenty thousand
grand.
dollars.
Mm-hmm.
Um, so at a $299,000 acquisition price, 20% down, which is pretty significant, right? That's going to be 84 grand. So would you be putting 20 down here or 5, 10 seller finance?
Probably, I would try to do 25,
Okay.
because the main reason why, if I can, like, I'll be able to set aside um, a sizable uh, repairs, maintenance, and vacancy. So
Hmm.
those, those will be zeros, and
Okay.
the PM fee would be 9%.
Maybe 9% there. Okay, let's take a look. See. I mean, that's not a that's a pretty solid cash on cash. 12 cash on
Yeah.
cash, $1,000 a month cash flow after that's definitely not too shabby. And that's with $20,000 in pre-rent rehab. So I mean that's basically this building could have be 25% vacant. You could have one unit not at $900 a unit, and you could still
Yeah.
be break even here. So I definitely like that. So I like what I'm seeing here. It's a lot of cash to tie up, which is not my favorite, but if that's what you want to do, I think you go for it.
But here's the question though. So if we can go back to the original property details, one of the things that caught my eye, if you look in
Mhm.
the quick insights, the last sale price was 110, but the mortgage balance is 144, 144.5 roughly.
Yeah.
I've got a
So it's
question about that.
Yeah, so it looks like the property was picked up for 110 in 2022, and then around that same point in time, they were able to secure some type of loan for more than that. So it could be a loan that includes, say, like the property's purchase plus some rehab components. They may have over levered
Uh,
using something like that. So
okay.
I think them being at 144 makes sense. Plus, if they're selling for 300, the deal looks like it's had some work done on it. It's
That's
That's probably what
To
I'm
me,
seeing there.
that's steep though. Like I was thinking, let's say, depending on how much they put in rehab, like if you want to use almost kind of like a quote unquote
Yeah,
rehab rule, if you will, of,
yeah,
make as much profit as you put into it in terms of rehab. So if they put in, like, and now me thinking this through logically, if they put a mortgage on there for 150 and they bought it for 110, I'm thinking that they would have to be splitting the difference. So what is that? 300 from 110. So that's what? 190. So they probably, I'm guessing, or probably put in about 95K so that they could break even. You think by listing it at 300? Well, it was a little over 300 because they did
yeah,
drop it.
yeah. Well,
Mhm.
based off what I'm seeing there, we checked out the photos, right? This thing, if they put in 95K, it would have had to have been on structurals because the interiors of those units are definitely not up to snuff. So
Right.
I'm gonna drop myself outside of this property and just take a look outside the front. Where is this bad boy? There it is.
Chester, are you from Detroit?
I'm not. I'm from DC area, more specifically in Maryland.
Okay. I'm from Detroit, and I think that 299 price is too high.
Yep.
Yeah,
Yeah. I was like,
that
that was
makes.
just,
I would
yeah.
agree. That looks.
Because
Yeah,
I didn't specifically look at that, but I did see it. I didn't go over there to look in it, but I
Mhm.
think it's too high
yeah. What
Yeah.
are, what are properties going for in this area?
for
That's the
that
question.
area.
Yeah.
Yeah. For
Oh, that.
'04, I mean, it's like halfway decent, but like nothing where it's like,
Wow, this is a real. Jeez. And the median home price here is under 70K. Wow.
yeah.
Okay. So yeah, this thing is definitely
Way
unique.
overpriced.
Yeah, that's so granted it's going up for sure, but no way, no way is this thing going up for absolutely not. I don't see it. Okay. How much multifamily is here? Also, I should mention, you guys asked for an easier way to figure out which areas have the most multifamily. So one of our
Mhm.
next upgrades, you can just go to any city and just click the word multifamily, and it'll tell you what zip code has the most multifamily in the entire city. So we changed
Oh,
that
I
for you
love
guys.
that. That's great. Thank
Yep,
you.
yep, yep, you got it. I listen. You guys tell me, and you say, Donato, I love you, man. But you got to fix this. And I go, okay. So we make it happen. So basically, how this will work moving forward is instead of like picking like a year, it'll just say pick what type of property. And then it'll highlight what part of the city has the most of that. So if you want single families, here's what single family are. If you want 10 units, here are where the 10 units are. And I'll just do that.
Nice.
So for this, it's actually that's a lot of duplexes. It's a ton of duplexes. 17% of the market is duplexes here. And my rule of thumb is 10%, which is now up here. You guys can see that on my
Yeah.
rules of thumb. But not a ton of 3 and 4 units overall. Not a ton. Not bad though, but not a ton. But and what's the income like in this area?
Low.
Yeah, I mean it's going up, but yeah, under 30 grand. So
Mhm.
having a median house price of $300,000 or house price of $300,000 when the median home value is under 70K, where the income growth is just over 15%. My rule of thumb is 15% at a minimum over the last
Mhm.
5 years. So it's just barely growing faster than my minimum like to see. The 30% rule for rent. So the rents that we need to charge are great. We want $900, and that's what people can afford here. If that works out, the value is way off.
Yeah.
Yeah.
So
How are rents performing for 2 bedrooms in this area right now? Okay, yeah, up about eight. Some pretty solid drop offs. Peaked around $1,000, fall to 880. Peak around $1,000, fall to 900. Peak around $1,000, fall down a little bit. Yeah, so we're having some volatility here in the marketplace for our rents. I mean, if we're going to be straight up, offer what we really want to offer on this thing,
I would
and
say
I love.
probably like to my I'll just say it. I'd say between 210 and 215. Like absolute peak would be 215.
Yeah, I mean that's the cool thing about this is like I don't care what they're listing the property at. I care where it works.
Yeah.
Uh, Chester, are you getting quoted? What's your current all-in rate for your
Um
lender gave you? Was it 7?
yeah, it was 7 for single family rentals. They said it would be like a little bit higher. So let's say 7.25 for
Okay.
multifamily.
Okay. See, this to me makes sense, right? This makes sense at 215,
Mhm.
right?
Yeah.
And with repairs, vacancy, and capex factored in, and a 9% management fee, you're still getting 11% return. And even when you
Yeah.
want to factor in a 0% for repairs, vacancy, and capex here, you're getting over a 7.7 cap, which is great. 22% cash on cash in a $1.4 thousand monthly cash flow. So basically, you can be 1.5 units can be unoccupied at any given time. That makes sense to me. Plus, we know it's at least $100,000 more than they bought it for, at least 70K more than their mortgage balance. That
Yeah.
makes sense.
Yeah.
Decent
So
cap.
they're
I mean,
just trying to
if
basically
I was going to be greedy about it, I was going to be greedy about it.
205.
Yeah, I might just go for a straight 200, but still, that makes a lot more sense to me for you for buying this
Yeah.
because the income's low, and because we are if you buy at $210,000, you are paying 3 times the median house price in this area for this asset. And
Yeah.
the income is low enough that you are not likely to sell this to a local. This is going to be sold to another investor at some point down the line. And while the
Right.
appreciation here is really strong, the rent growth is not been really what we're seeing here, even up to this month, it has not been rocketing up. So you're in a point where you're probably still overpaying for the area. So you're not necessarily going to be able to cash out a huge amount of equity in a short period of time, and your rents aren't skyrocketing, which means that we're going to have to make sure that you're getting paid up front in cash flow right off the bat. Like
Yeah.
we need to buffer you in some way. But I think this definitely makes more sense. Let me do a quick crime check. I don't know this area at all. We're gonna find out what's going on. Oh, also that crime pin legend is coming out
Uh-huh.
as well. So that'll be right here
Nice.
in the sidebar. Okay. So remember, orange is physical assaults, so simple and aggravated assaults.
Mhm.
Okay. Looks like most of those are towards the north. This is actually a little quieter of a street. Got some welfare fraud.
Okay. Fraud.
Who doesn't love some good welfare fraud? It's a
Yeah.
rare one. I don't get that too often.
So I guess
Got some
that's it.
con man running some games, some more welfare fraud, a lot of welfare fraud.
So that's an example, I guess, of how uh you know the especially seeing the rental the range, I guess, of the rentals over time kind of supports those types of crimes, those welfare fraud crimes.
Yeah, looks like you have some folks who are having issues. Either they're collecting welfare, they're not necessarily getting those paid. Not as much violent crime as up north, which is nice to see. Um, how many people own here? And Corey, I saw your message. Thank you, man. We're gonna keep making these modifications as best as possible. Okay, so we were 50-50, and now we're much more in my 30 to 40% range, which is great. Love that. My rent to ownership ratio. I wonder, how are the schools? Not great.
Not
Ones,
good.
twos, ones, ones. Yeah. Okay.
Not
Not
good.
great, which is
Mm-mm.
okay. It's okay. And how long is our current days on market in this area? How long are they taking to sell?
Oh yeah, that was the other thing I was gonna. I know that one's coming, but yeah, because you see
Yep,
the
yep.
median.
Your average days on market, that's on yep, that's being done right now, actually. I just talked to the team about that 2 days ago.
Awesome. Yeah, that's
I
awesome.
tell you seriously, every time you guys send me something or say, Donato, I need this little tweak, we put it's on our map. I have like Corey's stuff, and I have Sarah's stuff, and I have Chester stuff. I have tasks with your name on it, and I just put it in there. You guys are all a part of the Bright Investor journey, for being here and just making it what you want it to be.
That's amazing how fast
So,
you guys turn around this stuff and get it active.
thank
Seriously.
you. I tell you, see, my hairline used to be straight. Okay, used to be straight. Uh, then this happened. I love it. Um, but it's a pleasure, you guys. It's a pleasure being able to do this. Um, so Chester, on here for the days on market, right? Clearly, the days on market is improving over time. Like properties are selling faster here, which is solid. The last couple of years we've been peaking around the 2.5 months range, and our fastest is just over a month. Now, that's
Hmm.
not exceptionally fast. We've seen markets where the fastest time on market is maybe 15 to 20 days. So it is getting faster here, which is solid. But it's not necessarily a situation where you're going to be able to put this property in the market and get an offer in 10 days, right?
Right.
So I think you're right on the money here, right? Everything we're seeing with the lower school quality, lower income, fast appreciation, but higher price relative to that, with kind of variable rent growth, there are a lot of what I would call risks or red flags here, which means if you're going to make this price, who cares what they're offering it for? We're going to find something that puts money in your pocket immediately. Immediately. We're
Yeah.
going to take this thing down.
Yeah, almost kind of like if you were a bank and you were trying to offer credit or a credit card to somebody with like, let's say like a 400 credit score, you'd want to be baking most of your return on or your recovery on getting the money back through interest versus, offering somebody a lower or a higher credit score, a lower interest rate over time. So more cash flow up front would
Yeah.
compensate for it being in, a area with, higher crime, lower rent values or lower income values, and not necessarily great schools, which of course is
Oh,
based on property
geez.
taxes.
And the population's is hemorrhaging. Ugh.
Oh,
Jester, I
that's
have to
not
play
good.
devil's advocate here. Do we have to do this deal? Do
No,
we?
no, no. This one,
Okay.
this one popped up yesterday, and I was just
Okay.
like, when I saw um, the listing price, that was just one of those things. I was like, that's a little
Sure.
odd, but yeah. So
Yep.
probably, yeah, we can definitely pass on this one. But yeah, like I said, it was just one of those things where it was just kind of like, I mean, let the heck kick the tires since we're here, and
Yeah.
But yeah, no, this one,
Absolutely.
yeah, I think too many red flags.
There's this. I'm trying to find a green flag. I'm trying hard. I'm just not seeing a ton of the green flags. Okay. Let's see here. Anne, hello, Anne. Welcome to the family. Great to have you here. Really appreciate it. Are the office hours recorded to watch later if we miss any of them, or do you have to catch them live? We do record the office hours, and we do put them live for all Bright investors to get access to later. So these are recorded for you. Do we generally get anywhere from 10 to 15 to 20 people, depending on the week? I know if people come in, they ask questions lists like this. So yes, absolutely, these are recorded. You get access to these moving forward, and yeah. All right. PC, can you do sales comps of lots or appreciation of lots? Of like PC, let me clarify. You're talking about vacant land lots, correct? Looking for vacant land?
That would be
Yes.
interesting.
Okay. Sure, it's possible. A short answer is let me find out. Let me see if I can do it. The answer is it's possible some way, somehow. So I will write that down, see if I can make that happen, and see what we can do there. Now, what I'd love to showcase to some of you guys too is a deal that I'm actually offering on. If you guys are cool with that, I have a deal that I found with BrightInvestor, and I analyzed with BrightInvestor, and I post on social media. I'm making 7 seller finance offers. I did 2 days ago, and I have 3 of them said we're interested, and we'd like to tweak the interest rate a little bit and have you come take a look at the properties, but they're open to it. So if you
Yeah,
guys are cool with that, I'll just show you one of the deals that I'm working on, how I'm kind of taking this down and why I like it.
yeah, let's check it out. Yeah.
All right. I gotta remember now what the freaking address is. Let's see here, 3845. No one go offer on this property now, since I'm showing you my numbers, but I trust you guys. I think this is the right one. Find out. Oh, yeah, that's one of them. So this is the deal. So you guys can see, right? This is one where the bedrooms and bathrooms were off, and so I just edited this. So this guy is on this property. He owns it free and clear. So I'm like, hey, might be open to seller financing, right? And they're 1 bed, 1 bath units. So this is a 1 bed, 1 bath property, and they're rent for about $800 is what I've underwritten in here. And what I've done is said, okay, great, I can get this property for 3,200, but I don't want to put any money down, and I'm not going to pay. The bank's quoting me 7.5% because I don't have access. I'm not a W-2 worker. I'm like, well, I'm not going to do 7.5 or 8%. So I quoted the guy 4% interest rate, and I said, I'm not going to pay you 250. I'll pay you 200. And I have my taxes. I did my estimate here of 3,000. So I like this deal. It's a 235% cash on cash return, 0% down, 4% interest rate. Now he countered me at higher interest rates. I'm going to give him 4.5%. But $1,000 a month for $5,000 out of pocket, and then if I take out my repairs, vacancy, and capex, I'm getting $1,600 a month in cash flow for $5,500 of upfront cost. For me, I like that opportunity. And this is an example of a screaming deal that I go after.
Yeah,
One
that's
of the reasons I felt
insane.
confident. What was that, Jason?
That's insane. That's great.
Yeah. So I made 7 offers like this. I have like 3 more, But
He's letting you
go ahead.
finance it. He's letting you finance it 100%. Like he doesn't want anything
Yeah.
down for it.
This
Why?
one is the other guy countered back. He went a little bit down. One guy's countered at 3.5%. One guy countered at 5%. One guy countered at 15%. So this one's gonna be 0%. And I told the guy at 15 he can kick rocks. Like I'll give you 5% down, no, max. So the reason is because all of these people, these properties have been in the market for 60, 90, or 120 days. Found them on BrightInvestor. I double checked it on things like Zillow, confirmed my information, right? Then when I popped into BrightInvestor and I saw how long he'd owned it, and I saw mortgage, and I saw the rent comps, and I ran the numbers in here, it's like, hey, this deal makes sense conventionally at like I think 175, but it was going to be a whole 150. It was going to be a whole lot lower. Or I said, hey, I wonder if he's going to be open to seller finance. I have a buyer's agent that I'm loyal to. He's my guy. So I said, hey, go ahead and fire this over. I'll pay him a couple grand for the work that he's going to do to help get this set up for me. Also, value add to you guys. Do you guys know the company Creative Finance TC? Put it in the chat for you. Sarah's going to tell you about this later. This is a company that specializes in subject to wrapped seller financing and creative financing transactions, both on and off market. So if you're going to go off market, you guys have a deal that's direct to seller, or you're working with an agent that doesn't know how to do these types of transactions, they are a company that will do the transaction coordination and help that property get to close for like $2,000. And they work a la carte. They will help you. They will draft the PSA for you. They will draft all the documents you need. They'll help you make sure that that creative finance deal goes through. So if any of you guys are considering those and you don't already have a transaction coordinator in your back pocket, that's my gift to you. And that's an amazing deal. How did you find this kind of deal? Was it listed? Well, I searched on BrightInvestor. I looked up show me on market multifamilies in this area because I live like 3 blocks away from here. Like, okay, I'm interested. So I searched on BrightInvestor, and I also double checked on Zillow and Redfin to see what's going on out there. And then when I found things that had been on the market for a long time, I said, okay, well, these look interesting. So looked at a couple photos, and then I just came home that night. And for like an hour, I went through 15 of them, and I put the address of BrightInvestor. I checked the area really quickly, and then I just did this, and I ran the numbers, and I was like, okay, this makes a lot of sense. So I created the report, sent it to my agent, and said seller finance offer at $200,000, 0% down, 4.5% interest rate, 30-year term, 15-year balloon, send. And I did that for like an hour and made 7 offers. And 3 of them were maybes. So that's what I did. Chester, is that the site Creative Finance TC? Yes, that's correct. This site, you guys can double check my work. This site was referred to me with my good friend Roman Casas. He is a agent and seller finance expert out of Phoenix, Arizona. He's done over, I think, 300 or 500 of these seller finance deals. He's a friend of mine, and that's what he uses. So, well, he has his guys in-house, but this is who he uses for more one-off stuff. And yeah, we've done a lot of stuff to find stuff together. So that's how I found this deal. And so I have 3 others that are like this right now. And that's part of the reason that I like the St. Louis market. I want to show you guys that I put my money where my mouth is, right? I don't care that they listed it for 250. Who cares? It makes sense for me at 200, so that's what I'm going to offer. And that's it. They can always tell me no. They can say, Donato, no, you're ugly and your hairline's receding. I'm like, I get it. That's fine. No reason for name calling, but that's the worst they can do to me. And all it takes is one person to say yes to get $1,600 a month in cash flow in your pocket. And I mean, if I can get a $20,000 a year bump to my income for $5,000 out of pocket, yeah, I'll do that. No problem.
So funny enough,
that's what I use BrightInvestor for. Like I use it every day for this to just run my numbers. Just like boom, done, go and send.
Yeah. So funny enough, Jason and I don't know if Santiago showed up, but we all are part of I guess you want to call it a virtual investor group from a guy named Michael Zuber who runs one rental at a time. And that's his motto, is basically do the work.
Yeah. I just did
So
I did a podcast with Mike. He asked me to come in and do an event for the one rental at a time group. I need to actually do that. Chester, I
yes,
need to
that's
connect
in
with you.
February. Yes, we will be there in February in person.
Okay,
If you can make it, please. Yes.
great. Okay. I got some questions here in the chat. I'm going to answer. I got one from Anne. Anne, can you repeat what terms you offer for owner financing? Yes. Okay. Here's the terms I'm using. Okay. Also, I need to go ahead and point you guys out to something. This is called the IRS minimum interest rate. Okay. If you look this up, National Family Mortgage, this is the IRS's minimum applicable federal rates for, basically our treasuries, our SOFRs, or things of that nature. So when I offer interest rates for my owner financing deals, sellers will come back to you and they'll tell me, Donato, I need an interest rate that's at least higher than the IRS minimum rate. Meaning, because basically, what's the lowest amount of risk I can get at what rate of return, which right now is about 4%. So when I offered 4%, they said, Donato, I can get IRS minimum rate of about 4.3%. I'm like, valid. So what I gave them, this is a link you guys can use. I'm gonna put it in the chat here for you. The terms that I used for this deal, and I'll put this in the chat here for you as well. I did a 30-year term and amortization. Sarah, you know what amortization means. And I did a 15-year balloon because they're going to ask for one anyway. I did 0% down. And I originally did 4% interest with an inspection contingency. That's what I started at. They came back to me and I got someone saying, I want you to have some down payment so you have, skin in the game, which I can respect. I get it. And other people saying they need a higher interest rate. And other people said they need a shorter balloon period. So I also made offers at a 10-year balloon instead of a 15-year balloon. I did a 0% down, 3.5% down, and 5% down. And then I just tweaked my purchase price based on what I needed. I did 4.5 or 4.75% interest with an inspection contingency. Those are the exact terms that I used to make these offers. And again, I have to stress this again. I made offers at what worked for me because I knew this person owned it for a while. I knew this person had tried to sell it on the market for a while. I'd run the numbers, I'd check the area, and I knew that if I got this offer accepted, I was going to do a happy dance.
Are
So,
you
yeah,
are you fixing this up or are you just renting it out straight?
this is going to be pretty much rented out straight. So I got some photos they sent over from me. All the units are actually already rented. I called this guy up. So they're already leased, and I only need to do like a $25 or $30 rent bump to keep them. And they're not updated, but they're all rentable condition. So I'm basically going to step into it and not do much to it. That's also why I'm doing an inspection contingency. Because if I find out that the roof is about to go, or if I find out that the HVAC system is about to go, or anything physical, I'm going to either have to know that I got to bring in more cash to the deal to make it work, or I need to negotiate that with the seller. So. And one important component there, if they're going to seller finance you a deal, one thing that they don't want is they don't want you to come in, trash the property, and then a year from now say, oh, can't make the payment anymore. You get the deal back. And then they have $50,000 worth of repairs to do. What you don't want to do is be the guy that comes into a seller finance deal, right? Does $50,000 in repairs. And then the seller says, hey, I'm taking the house back for some reason, right? And then says, oh, wait, what the heck? I just spent all this money on this property. So if I have a situation where the property needs a ton of repairs, I'm going to avoid having to bring all that cash in and try to get a credit. And what time frame did you offer for contingencies and closing? I actually didn't. I did not give them a time frame for that. But standard, right? I can get my inspection guy out there within 10 days. And then at that point, closing is pretty much on them. The seller finance TCs can get it done anywhere from 3 to 7 days. So what's really valuable for a lot of people right now, for every single person in this call tonight, is it's almost the end of the year. So anyone that has a tax obligation that they're really trying to get taken care of by the end of the year needs those properties to sell by end of December. So if you want to really sweeten your deal, you can say, hey, look, I have a hard money lender, or well, this is a seller finance deal. So we can say, we're going to seller finance me this deal. I have a transaction coordinator ready to go. I can close by end of the year. So for everyone that wants or needs to close this by the end of the year for tax purposes, it's a huge benefit. But usually give it like 3 weeks total. At this point, the bank doesn't need to be involved. There's no credit check, there's no bank check, there's no nothing. So bank doesn't care. All it needs to know is my inspection done? Can the transaction coordinator do the transition? That's pretty much it. Then I got one other question about sub 2. You found these opportunities on MLS, but sub 2 is a bit scary. What would you recommend to learn how to do sub 2, at least feel more comfortable? So the transaction coordinator recommended they can do sub 2, they can do wraps, they can do things like novations, they can do seller finance. I have not done a sub 2 deal. I also think they're scary, and I think they're a little bit high risk, personally, right? I'm not a huge fan of any strategy that says, "Hey, we're just gonna try and make the banks not call the loan due as our de facto." Like, oh, we're breaking the rules out in the open, and we're just gonna hope we don't get called on it. Yes, I know there are ways to counteract those things happening, but for most investors that don't have like a pile of capital or don't have like a good TC backing them up, that can be a really massive nuclear bomb on their transaction and their movement forward in the industry. So I prefer to keep things relatively simple, whether that is your seller finance things like this using a TC, whether you're using conventional financing, whether you're using a hard money lender to do a BRRRR, and that's pretty much it. I have not gotten into the wrap space or the sub 2 space or the novation space. Yeah, I just haven't done it. And part of the reason I haven't done some more creative strategies like short sales. If you guys are not familiar, you guys can go look up what happened to the short sale queen today. It just dropped on the news. You can go see. She just got federally indicted for doing short sales and basically committing fraud. It's a fun game to play, but anything that involves trying to trick a financial institution, I'm not a huge fan of. So that's just my opinion. In the future, maybe I'll do a sub 2 and I'll learn more about it, and that could change. But as it sits right now, I can't recommend a sub 2. I have not done one, and I'm not the right person to tell you that you should go do everything you can to go get a sub 2 deal done. But that's just me. And do you have the option to sell before balloon is due, or do you have to hold the property until then and refi? I have the option. So basically what we put in that as a clause is we do no prepayment penalty. So at any point in time, I can choose to refinance or sell the property before that 15-year balloon and pay that person out with no prepayment penalty. Absolutely. So no, I absolutely want to give that option back to myself, because if rates were to drop or there's a huge spike in appreciation, then that is something that I want to be able to take advantage of. And I know I only put the balloon in there. A lot of people hate putting in balloons because the balloon means that you're gonna have to pay this guy the rest of his money. But most people don't like the idea of not having a balloon in there. But putting a 15-year balloon means that I have 15 years of appreciation and loan pay down to go refinance this thing. I'm feeling pretty good, especially because also I'm not going to a bank, where traditional banks make you pay all the interest up front in your mortgage payments. I'm going to structure it differently, where I have my loan, and instead of it being 80% to like interest and 20% the principal, it's going to be about 70% the principal and about 30% to interest. So I'm getting a lot more loan pay down over the course of my 15 years to build equity faster.
So that's written into the contract, right? Sorry, I don't know much about seller financing at all.
Yeah, absolutely. And so like a lot of this kind of goes, hey, look, we're going to do 30-year amortization. It's going to be this interest rate. We're going to pay you this much. And I break that down. Of that payment, right, this is going to be a $1,500 a month payment. Or wait, what's my actual number here? It's what's my mortgage? Okay, my gross monthly expenses is $1,575. My mortgage and taxes and insurance is going to be, I got to change it to monthly, not annual. That'd be easier. It's going to be like $1,200, $1,300. So I'm going to say, hey, great, I'm going to pay you $1,300 every single month. Of that, this much is going to taxes, this much is going to insurance, this much is going to the principal, this much is going to the interest. And I break that down. Say, here's what I'm paying you. And so I would just make it super clear. Because and when it comes to real estate, guys, like no one wins when you try to screw someone over. Like if you try to say, oh, haha, like I'm paying you $1,500, but only $1 that goes to interest. The thing about it is we have these people when you're doing a seller finance deal, you're having a 30-year relationship with them. And I think if I'm going to get on my soapbox here, and this isn't what this session's supposed to be about, me on my soapbox, but darn it, we're doing it. When you get into a seller finance deal, you are entering a 30-year relationship with that person. And this person isn't a bank. They don't do this for a living. They're not in the business of lending out money to people, and they have clear-cut criteria. This is a person that has highs and lows, ups and downs, marriages, divorces, kids, births, deaths, life events. You are going to have a relationship with them for years. And so many people focus on just getting to the closing table that they forget that this is someone they're going to have to be interacting with every single month for decades. There's no benefit to trying to hide something from someone, because that's when you get people who don't have the proper expectations. They say, hey, actually, I need to sell this property now. 5 years in, have this big thing coming up. I had to sell for my kid's college education. No, I have a contract here. And we talked about this, and setting those expectations up front, lining out what you're getting paid, how much you're getting paid, and what those dollars are going to is critical to minimizing your risk down the line. Corey, thanks for being transparent. Absolutely. Since day one, you guys know I have nothing to hide. Anything you need, ask, and I will be 100% honest about everything that I'm doing. And thank you for sharing your strategy. This is so helpful. What have you found is the best way to approach owners when doing seller financing? So what I like to do is I put on my mascara and I bat my eyes real slow at them and tell them that, hey, I'm just a sailor coming in from port trying to find someone to seller finance his property. But more seriously, I just write him an email, especially when the deal has been on the market for 60, 90 to 120 days. Those are the people that we can just say, hey, look, I know you've tried to do this property. I know you've had several price reductions. This is what I can offer you.
Do you do that personally, the email, or do you have your agent do it?
Depends on the situation.
Okay.
I could do it personally. I could do it through an agent. In this case, because these properties are active, they have a listing agent at the minimum. So you'd be contacting the listing agent and sending it to them, and the listing agent would present it to the seller. So in this case, it's that. We'll say, hey, Mr. Agent. And what I did for each of these properties, guys, to be clear and transparent, I made 2 offers. On every property, I did 2 offers. One was conventional, one was seller finance. So for this property, I think I offered him like 150. Like, hey, if you want, I'll buy it for 150 conventional, or I'll buy it for 250 seller finance. And here are the terms. And then the listing broker basically said, great, I'll present this to the seller. Seller gave him feedback. Some of the listing agents came back and said, yep, our seller's not open to seller financing, but they are open to conventional. Others said, hey, this guy is open to seller financing. Here's how this could work. And they countered my offer. That's how it worked.
Very good.
Chester, you've had your hand raised for a while. I'd love to go ahead and answer your question.
Yeah, I guess there's a couple of different things as you were talking. Like I know one of them I'd forgotten. I was kind of just jotting down a couple of notes. Do you have a roadmap like with the Creative TC for either linking out or providing like recommendations? And that's going to kind of dovetail with the next question of I don't remember. I think it was something that might have been in the works, but definitely if that was off. But is there going to be a seller financing option, so to speak, within the deal analyzer?
Mm-hmm. Yes, there will be. The ones that are coming out first are BRRRRs and co-living, because right now you can kind of hack the long-term rental calculator by just doing 0% down or 4.5%. But we will create a specific one that just says like seller financing. So you'll be able to do things like, what's the seller's current loan balance? It'll do a couple more things like that to be even more specific. but yes, that will be coming out. And then as far as road mapping, it do have some resources that I have curated for people as far as lenders to use, coordinators to use, things of that nature. I do, full transparency, I do hold those for a lot of the folks that I work with one-on-one. So I have about 5 people that I work with one-on-one for getting going from either I have no properties to I'm trying to scale up, to I have several properties I want to do more, to I have a ton of properties and I want to go into commercial. So I can definitely talk to you about that. But some of those things I do hold for those folks and for the more one-on-one work that I do. But things like the creative finance TC is one that I can give out because, great company, they're public, and it's just easy value add that I can offer because I know they do good work.
Okay. Yeah. No, that's definitely appreciate that. Yeah, like I said, I was just more curious because like I'm seeing like, like the, breadcrumbs or dots, and I'm just trying to, connect them together. And it's like it seems like there would be a roadmap, but yeah, so that definitely appreciate the insight.
You got it. I got another chat here. Let's see here. And do you adjust your purchase price offer based on how much down payment you offer or what APR you offer? Absolutely, I do. If they're going to make me pay 5% down, well, I don't want to pay you 200 grand anymore. I want to pay you 185, 100%. I tweak my offers all the time. So if I'm going to do a higher down payment, I better get either a lower interest rate or a longer balloon or a better price. Right? That's always a give and take. So absolutely, I will adjust those things. Not even a question. Absolutely. Let's see here. Any other questions that I can answer? I know we're coming up on our hour here. As a reminder for those who came a little bit late, you guys will get an email for the next new versions coming out, I think, end of this week. I believe the stuff that's coming out this week is you can now the multifamily ability, so you can search for by asset. You guys remember on the Bright reports when you scroll to the bottom, it has the market research on them. These graphs will now be in here. There'll be a button that says market research, and you can look at it while you're doing your analysis. You can now export up to 500 properties instead of 24 because that was really annoying to a lot of people. So we got rid of that. And linked properties is launching for the first time. So down here, there's going to be a little button that says linked properties. And you click on that, and it'll tell you every other property that this owner is registered to own. That plus the draw boundaries, plus the Sarah, your request to be able to filter rent comps like sales comps, that's coming out this week, I believe. And our latest push for data for updates for census and a bunch of other data getting updated through end of year. So I think it's all the stuff that's happening this week. I'm not mistaken. If you guys have anything else you want, please, of course, let me know, and we'll make it happen.
I guess just one, and I think this was one, like, I'm guessing probably in the works, but in terms of like looking at the, we'll just say collectively multifamily, but side by side, I'm of course thinking of duplexes, but, how to find side by sides versus up down multifamilies.
Oh, yes. Filtering by stories. Yes, we have that. We have that in here coming out. So being able to filter properties by 1 story or 2 story or 3 stories. Yes, that's in my Chester task. It's in there.
Awesome. Okay, good stuff. Good stuff.
Absolutely.
I had a question for you.
Yes.
PC.
Hi, PC.
So I'm looking at a place. It can either be a double multifamily or a single family residence, and it's in Chicago. And what happens, the reason that I'm curious about is because the area that it is in is going to be growing quite a bit. There's a project coming up. It's a 10-year development. So you can see that there's already some really like new houses that they're much more compared to the houses around. So how would you go about it on something like this? Because I noticed that some people are starting to buy houses and they're starting to renovate them.
Okay, so you had the benefit of being local, and you want to take
Right.
advantage of something you see happening.
Yeah.
Ooh, okay. Let me get my computer charger for a second. I do this every time. I'm sorry, guys. Let me get my computer charger. And if you guys are cool to stay on a couple extra minutes, we'll break this thing down and do another live case study.
Okay.
Do it live, do it together. Okay, give me 1 second because I can't learn my lesson apparently plugging my computer. Okay, PC, can you tell me a little bit about where you're at in the country?
Yes, I can send you the address
Yes,
of
please
the
put
unit
the
that I'm
address in
looking
the
at.
chat. Also, one of the reasons I like this group so much is people can put the addresses of everything and no one's scared about like someone doing a deal without them. Great. Okay. Well, ooh, Chicago. All right. Let me go. I see I have some questions in the chat one-on-one too. I will answer those in a second. Okay, let's go and do this.
So
Okay.
someone asked me if it's by the 78. No, it's if you're local, it's near the United Center,
Okay.
West
So
Loop
we're right
area.
here. Okay, so let's go ahead and let's take a little look-see.
Oh, yes, my company's actually doing a lot of work there by United Center, most likely.
Ah,
There we
so
go.
you're in the area.
Yes, I live by Sox Park.
Ah, all right.
Oh, we got connections.
Yeah,
Exchange contact info. Do it.
Yes.
absolutely.
Put your emails. It's a good point. I should start with that. Put your guys' emails in the chat so everyone here can reach out to each other and talk and connect.
Sure.
I'm going to foster connections. Okay. And aren't property taxes super high in Illinois? They usually are. It's
Yes,
something we have to factor. Now, 2909. That's right there. Okay. Is this it right here? Yeah. Okay. That looks nice. See my street view. I think those windows are updated. That looks good. Gated
yeah.
out front. What's my street? I love the tree cover. Do you guys know that streets with more tree cover sell for more than streets that don't have tree cover? It's a
No, I
little,
did not know that.
Yeah, as a matter of
little
fact, like,
something.
so that was one of the interesting things that I also started to see in Detroit. Like,
Yep.
for those who are familiar with, even though I haven't seen the movie Grosse Point Blank, it's about Grosse Point, and everywhere throughout Grosse Point, it is like night and day. Like everything is
Yep.
tree lined in Grosse Point. The property
Yep.
values are like 4 to 5 times everything in the rest of
Yep.
Detroit.
It's a fact. Part of it is one, trees can be expensive to install. Trees require landscaping, they require water, they require trimming, which means that local property taxes have to be high enough to support this actually taking care of the trees. Plus, whenever you have tree cover, it lowers the ambient temperature of that street by sometimes up to 15 degrees. And it's pretty cool. Lower temperatures are correlated with calmer and nicer people and people who are not pissed off because they're sweating so much. And those things have a compounding effect over time. And it's pretty cool. So all those things are a bunch of different factors that boil down to tree cover is correlated with higher property values. I think it's pretty neat. Look at all those emails. Love it. All right. So PC, let's talk. So here's what I have to say, right? Home price appreciation has been actually pretty not great. 16% over the past 7 years. So my rule of thumb is 5% per year, every single year. This area has been about 2%. And we have seen some massive gains. So we would drop as low as 314 and shoot up to 395, and then fall right back down to 310 and shoot back up to 360, down to 310, up to 420. So as far as an appreciation play on a long-term hold, at least the last 7 years, pre, during, and post-COVID's boom, we have not seen a significant month-over-month, year-over-year increase. So one concern I have is right now, before I look at other pieces, will this area continue to gain value? And if so, if you buy this thing for the current median home price of $394,000, 10 years from now, you'd be able to sell for about 500. It's not nothing to shake your hand at or shake a finger at, but it's not that consistent every single month appreciation that you might be looking for, but you're set. So let me go to my next piece of information, right? Population growth for this area, right? Let's take a look, see here. That's good, right? I like it. So I like to see at least 5% growth over the past 5 years. I get my little rule of thumb right here. This area is growing, which is awesome. We love, love, love to see that. So growing population is definitely indicative if we're going to be able to see growth down the line. My next and most immediate question is, what's the income like? Hopefully it's skyrocketing. And it is. Woo! Yes, I love it when I can predict these things. It's great. Okay. So our rule of thumb is 15% over the past 5 years. This area is double that at 30%. So we have a growing population and a very quickly growing income in this area, which is really, really awesome to see, right? It's really, really awesome to see. That definitely supports our thoughts that we're going to be able to get more value out of this place in the future. And my next question, of course, goes to rents. How are rents growing or not growing? This is important. If you had purchased this property a year and a half ago, you would have underwritten it to be renting at $2,600. And then 3 months later, it fell to $2,100. And now it's stabilized around $2,300. So rents are up for sure from when they were, but we definitely saw a bit of a pullback, which is bad, but it is a red flag to that point. So I like the income growth. I love the population growth. I'm not a huge fan of the appreciation. And I see the rents have gone up, but they've had some volatility there. So my next question is, especially if there's going to be development here, will it attract long-term tenants, i.e. people with families, kids, things of that nature? And I see some pretty decent schools. We got a 6 out of 10, 5 out of 10, 6 out of 10, 9 out of 10, 6 out of 10. Some pretty decent public schools nearby. They're all within walking distance of this house. And there are some poor performing schools down south, but this property is, just a few blocks from a variety of nicer schools. So we know that our tenants are going to like this spot in town. My other question becomes my rent to own ratio, right? So are people here renting more or owning more? And this is exactly what we want to see. 12 years ago, people weren't interested in owning and living in their properties here. They were just renting them. Over the last 12 years, we went from 68% rentership to 24% rentership, which means there's been a massive increase in the number of people who are moving here, buying houses, and living in them. So people are relocating here. When we see that, that usually means that, one, this is a more affordable part of town, and two, this is an area that families and folks who are buying houses to live in for the long term, owner occupants, where this is where they want to be. That is definitely a good precursor for long-term appreciation. Last little checky check. See what kind of crime is happening around here. Similar to what I did with Chester's, like what kind of crime and where is it hottest, right? That's all I care about.
Yeah, crime is still questionable.
It's okay. Hey, remember, there's always crime, right? There's no area in the world that doesn't have crime. So don't be scared about that. What I personally see is that more of the crime is situated around this part of town. Holman Square seems to be the more, and over here to the east around this Adams Street. But our little neighborhood, at least recently, and this was this last month, simple assault. This is actually a little quiet pocket. So I'm gonna go back in time even more. I'm gonna go back another 100 crimes. Let's keep going further back in time. See the trend.
Holman Square is a rougher area that's right on 290, which is our expressway. That is a lot of off and on traffic with the crime. They zoom in and zoom out.
Yep. So see again.
Donato, one really quick question, just something that literally just popped in my head. Is there a way to add in a filter of crimes that have taken place, like let's say within a given time frame, like either a month or like the last 3 months or something like that? So if you want to like really narrow it, so you're like, okay, if I know, hey, it may not be necessarily the greatest, but like what's sort of the quote unquote trend over time? Like, is it getting better? Is it getting worse? That type of deal.
I can look into it. We had something like it for a while. It worked okay.
Mhm.
I'll look into it. I'll see if I can tweak something like that. Because what I'm
Okay,
seeing,
yeah,
right, is as I go further back in time, right? I mean, even without me knowing this area, like Jason does, definitely more crime over here. And as I zoom in on my spot over here, it's really not too bad. We
So
got one.
it's
We got one
between,
assault over here. Like this, like when we talk about being block by block, this is not a hot zone, right?
yeah. So if you go
This
between
is a
California
little bit of a hot zone.
and sorry, I have
So,
gone to the area,
oh,
and just from what I have seen, that between California and Sacramento is when it starts to get more questionable.
oh, right over here. Wait. That's
Yes. So,
Sacramento. Where's California?
uh,
Hold on.
so right in this property is right in the middle between these two
Oh,
big.
okay.
That's
So you're
like the
saying that this is right on the line. Yeah, I mean,
yes,
I can see it. I mean, it's once you start going west of here, this is where you start getting more issues.
yes,
So you're on the
absolutely.
line. Makes sense. Let's do a real quick franchise check. So why we can do a little business check actually. Let's see what's going on here. So where are all of the nearby restaurants? Okay, okay, they're all to the east side. Okay. Where's my grocery stores? Okay, where are my cafes? All on the east. So you guys see how like even if you hadn't done crime here, the restaurants, the coffee shops, and all those commercial enterprises are focused on the east side, which is the same area we saw had some lesser crime. It's pretty cool when you start to see where these things stack up. If I look at where's my health? Where are the health centers? They're all on the east side and the south. Okay. That's interesting. So if we look at this deal, right? Take a crack at it. So I'm gonna pull up the Zillow for it. So you see BI, $319,000, active, 6-bed, 2-bath, 2,000 square feet. 6-bed, 2-bath, 2,000 square feet, active. Everything matches up perfectly. Love it. This looks like an actual grandma's house. That's awesome. They take great care of their stuff. Okay. Got a little fly trap there. Okay. So that instantly tells me there might be a issue with the windows. Wonder if flies are getting in. Needs flooring, needs paint, needs light fixtures. Overall, not bad. Oh, they have kids' room. That's cute. Okay. So if we're gonna pick this up as a row house, I mean this person's owned it for over 18 years. Lynn, she put an adjustable rate mortgage on it back in the day for 250. So this is important for you to see, right? She bought it, well, she put a loan on it for 250 back in the day. And she's selling it for 320. So in almost 20 years of time, right? She's selling it for maybe $70,000 delta. That's before we actually find out what she actually bought it for. So with a 6-bed, 2-bath, right? They're calling this a what's row house. So let's see here what this would rent for, right? It's an investor owned for 20 years. Yeah, okay, yeah. She's been owning for a long time. So 6-bed, 2-bath. What does a 4-2 apartment rent for in this area? Around $2,800. What's for $2,800 to $3,000. Our landlord insurance policy is going to run us $180. If we can rent this thing for $2,800 and you put down 20% at an interest rate like Chester's, you'd be almost breaking even at the list price. If you don't factor in repairs, vacancy, or capex, you'd make a little bit of money. I don't recommend doing that. Instead, I would highly recommend we factor in 5% here, and here. And let's go ahead and see what happens at 280,000. PC, are you cool with $240 a month in cash flow on a $64,000 investment? No. Good answer. I would probably not offer a list price for this, or I'd seller finance it because we know that she doesn't have a mortgage on it. I'll look at her and say, hey, look, I'll do 0% down at 4% interest rate, and I'll give you, oh, I don't know, give you 250 for it.
I noticed an investor, the
Yeah.
owner.
It's an investor owned it. She's owned it for 20 years, free and clear. Say, hey, look, I'll if you want, Mr. and Mrs. Investor, because you can either cash flow $250 a month with $62,000 down, or you can cash flow $540 a month with $7,000 down. I mean, I think it's a no-brainer. So I would offer her 250 seller finance, and that way you know if after repairs, vacancy, and CapEx, you're actually grossing almost $1,000 a month on this deal. That's what I'd do. But overall, I think there's potential here.
Thank you.
But you're probably gonna have to do some repairs. I'm gonna bump that up to about 10K.
It needs a lot of repairs, actually.
Oh, it does?
Yes,
Okay.
the pictures are better than what it looks like.
Okay. What do you want to factor in? 25K.
Sure.
It's whatever you want, really. But we'll say 25K. So yeah, I mean your cash on cash takes a hit, but that's probably I probably wouldn't offer more than 250 on this. Just for where it sits and where the rents are.
It's
Does that help?
it's the idea that I mean I've been looking at this area a couple months ago and I stopped because I couldn't find anything that worked for regular loans. But they're building United Center into its own city, which that's right by, which the play is hoping that it's going to drastically increase. But they've been trying to increase that area for the last 20 years. They do something good,
Yeah.
it goes up for a little bit, and then it goes back down. This new
Well,
idea, I could see it taking off. And
And we
it's
kind of saw that in the appreciation, right? Like we saw how volatile this place was.
yeah,
And so you
that's
see,
why.
like what I want to point out to you, like I just want to show you an example of what this looks like in Columbus, Ohio. I'm not saying go invest in Columbus, but I want to show you what this looks like when I'm talking about slow and steady appreciation, right? Kind of like every single month, every single year. Bum, 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 bum. Slow clap applause. Come on, you can do it. You can do it. There. That's what I'm looking for, right? As opposed to the kind of shark teeth that we're getting in that zip code. So like I like all things considered, I like the population growth, I like the income growth. Crimes and schools are okay on the good, better side. It's kind of on that line from where the businesses are to where the crime's at. I think this can make a decent seller finance deal, but I'm not 100% sure in your long-term appreciation because we are basically factoring in that this time the big renovation project is going to be the thing that kicks up property values. Maybe it does, maybe it doesn't. And so because of that relative red flag or risk, I would prefer you offer at a price where we know we can get you some cash flow coming in. Granted, not as much as Chester's because he was in a even worse area, but at least enough cash flow here that you are insulated a bit and you're getting your money's worth on this property, even if the appreciation isn't outperforming the way that we want it to be.
Do you always look at the appreciation that much? Like I invest more on the south side where there's not great appreciation, but there's good cash flow. So that's why I look there.
Yeah. I mean, I always look at it because if I buy a property, I want to know, okay, great. Am I expecting to get an extra 9% on my money every year from the appreciation? Okay, awesome. If it's going up that quickly and it's really, really strong, I might be okay with a little bit lower cash flow because I know I'm going to be building a ton of equity really quickly. But if I have basically, I either need to be cash flowing a lot or appreciating a lot, ideally both. So I always look at that with the population and the income to get an idea of, is this area going to be improving for me long term? Where do I need to get my money? Because it needs to come from somewhere,
I have a
either from the
hard time
property's
finding.
value or or the cash in my pocket.
Yeah. Around Chicago, I have a hard time finding both. That's the issue.
I understand. I understand. It can be a little difficult to put it all together. Okay, I'm going to go ahead and answer some of the one-on-one questions I got real quick. All right. And are there any other last minute questions? I know I have gone over our time. I tend to do that every single time we meet. Let's see here. All right. Any other questions I can help with? Jason and Corey just sent you guys a message on the questions you guys had. Anything else I can do? Going once, going twice, sold.
Question.
All right. So, oh yeah, Corey, go ahead.
Yeah, question. So, I don't know if I'm the only one. Hey, has anybody experienced where they try to look at businesses or franchises or crime and it's grayed out, or the screen has the pins, but they're really large, so you can't see specifically where the items are?
That is a known bug. So that came from the crime heat map we had, where every time we did the heat map, it would skew the view on the franchise or the businesses. That's actually part of the reason we got rid of the heat map, and we're pushing a bug fix for that this week.
Thank you very much.
You got it. All right. Well, then, guys, thank you for being here. We'll get this session recorded and sent out. We have a next office hours on Saturday at 10 a.m. Pacific. You guys could have the newest version in your hands by that point in time as well, which will be fun and dandy. If you have any questions, go ahead and email me. My email is donato@brightinvestor.com. And without further ado, talk to you guys soon.
All right, thanks again,
Thank
Donato.
Yes, thank you very
Definitely.
much.
Got it.
Guys, have a good night.
You-
All right,
All
have a
right.
good night, guys.
Have a good one, guys. Bye.